Hello and welcome to Spare Change Podcast. Today I have on Devin. Devin, you currently work with Matador, is that correct?
That's correct. I started Matador about a year ago. It's a gold company that kind of digitizes gold and lets consumers kind of buy, sell, and hold more efficiently.
So, as far as digitizing gold, that sounds really interesting to someone who's not familiar with the concept of um, maybe like digital commodities or things that are usually in a tangible form being brought to a less physical asset base. So what exactly brought you into that space? What gave you the interest to um make that connection, and what have you seen that makes that more valuable than say just purchasing gold as an asset?
Sure, absolutely. My career has always kind of been in finance, and it's been both as kind of a student, someone who really appreciates it, but also just working in the space. It started out in investment banking for a bunch of years, helping companies like Amazon and Microsoft and Google buy companies. Eventually moved over to the private equity side, so making direct investments at firms including Goldman Sachs and some VC funds. And there I spent a bunch of time in fintech. And when you actually see sort of how the sausage is made on the financial side, you realize that the back end of it all is often people like literally sending faxes back and forth to settle trades, right? It's just really old archaic technology. When kind of Bitcoin and the blockchain started becoming prevalent in the kind of mid 2010s, it was an area that since I just had been kind of both really interested in kind of the innovation side, but also a practitioner, it just made a lot of sense to me. In 2016, I helped kind of the launching of a blockchain project called Polymath, which the whole thesis there was to tokenize the securities market to make it more efficient and more streamlined. And that could be anything from turning shares of Apple or GameStop or anything into digital securities, meaning they can be custodied and held directly by a consumer or an investor. What it means is they can be traded without a platform or an exchange. It also means that they provide a basis of true ownership, right? So when you actually have the private keys to an asset, whether that asset is a Bitcoin or a share of stock, it really means you own it, not Fidelity or E-Trade or Robinhood, but you physically own it. And I think I saw some real benefits there. Over the years, as that kind of matured, I over the last couple of years, especially, right? I think there's been a lot of talk about a lot of asset classes being really undervalued. There being a ton of inflation, and when you think about a market like that, a lot of people will initially jump to physical assets like gold as sort of that safe haven. And despite it being a safe haven, it's just really hard to own, right? Like you go to your pawn shop with like a duffel bag of cash, and you come up with a bunch of coins. You got to store somewhere, and you don't want to lose them. So with that experience of digitizing other assets, with that experience of kind of the financial markets, for me, it just made a lot of sense that a product like gold needed to be just as fungible, just as transferable, just as storable as Bitcoin, but in the same kind of secure way. And that's kind of really the genesis of Matador.
Yeah, and I think one of the key points you made there was still maintaining the aspect of ownership, but not having to like physically lug around actual, weighted gold. Um, and I think some people may put up a fight or like have concern there where they see it as if I don't physically have it in my hand, there might not be the same actual level of ownership as say if I just have it in a wallet somewhere on the blockchain. Um, so I'm curious to like dive deeper on what it might look like in the future, whether it's gold or it's another asset class. Like, how do we actually say authenticate someone with on the blockchain, they have certain hash
Mhm.
associated with their um like actual wallet. And how do we determine, like, yes, this is the amount of gold versus, just the
Right.
current value, and what you purchased might not be what you have on the back end. So I
Yeah,
think a lot of people don't
absolutely.
understand.
No, it's a great question. Lots to unpack there. I'll start with kind of, I think, our long-term vision at Matador is to have something that you can, truly store on your own, personal wallet or your own personal private keys, the same way you can do Bitcoin. Unfortunately, at this, current day and time, securities laws don't quite cooperate very well, because when you start creating something that's like a meta asset, which is something that represents another asset that almost instantly usually turns into a security, and that just creates a lot more friction in buying, selling, and trading. So we're really aiming to the next best thing now, while we go out and fight a long protracted legal battle to kind of get the products that I think consumers really want. That's kind of what you identified. For now, I think what we have is an offering that's a lot better than storing gold under your mattress, which is basically gold that's kind of held on your behalf, is stored at what we consider an extremely safe place, which is the Royal Mint in Canada. The next generation of our product will actually have these kind of blockchain based receipts to say, here's a transaction that you purchased, you owned it, it's tied to your wallet. That's certainly almost kind of the next launch version of our product to have that. But you're absolutely right that I think the most important thing is to kind of trust and understand where things are held. And for us, like, we actually think that storing gold at the mint, but being able to redeem it with two buttons on your iPhone and get it shipped to you, is actually in some ways like safer and more secure than a safe deposit box that some magnet can unlock in your house, or even some private safe deposit box in a bank. I think you've seen a bunch of these cases the last year or so where people like federal authorities and things like that will kind of actually just go seize a vault, or an entire safe deposit box, because they think there's like some criminal activity or something. Actually storing it in neutral government that's known to have been globally pretty secure for a bunch of years, where a lot of governments store their gold, felt like a pretty good option to start for us.
And I think that kind of puts that question a lot more at ease within the framework of, if you have such a high level of accessibility, and I think this is the trend for a lot of fintech, a lot of the way that we're spending new money, is people are less trusting of that centralized way of spending their cash or storing their cash or even equivalent assets. um and a lot of people have moved away from traditional banking. They've got an app on their phone that they bank with now, instead of actually physically going to the bank, or they've got different wallets that they're storing crypto on, that they don't have to move back and forth as much as, say, a bank account. um not to completely dismiss banking in the traditional format, because there's something to be said for um like the level of regulation and safety that's involved in that. But I think a lot of people do want authority on their finances, especially when we see market conditions like we did in 2008. And um, even now, we're seeing kind of that new wave of financial concern where, younger people are starting to feel those first impacts of what the economy can look like if it's not in a good place. Um, with a 10-year gap in between recessions, we didn't really have that perspective. So now younger people are like, okay, how do I move my money in a way that's going to be completely something that I believe in and trust, versus somebody else is handling everything on the back end and I don't see any of that. So I think that definitely frames it in a way that's more understandable and more digestible for the average person who's interested in, say, purchasing gold. and they've never done it before, and they believe it's like the old way. But maybe we're looking now in a framework of, hey, this is a lot easier to do than the way that it's been done before, and there's a new framework for it. One of the things I wanted to also highlight is just like your resume and your experience with bringing companies onto blockchain that might not see a purpose in it or see, you know, where they could integrate. What has that shown you, and what are some of the things that you've experienced in bringing startups and newer companies into blockchain?
Yeah, absolutely. I think the interesting thing, about what you're talking about, which is kind of this trust and security layer. And frankly, like if you're in your late 20s or your early 30s, you've probably never had a period in your life where you were an adult that you needed, a store of value, or you needed gold as a part of your portfolio. Because heck, if you were just sitting in, the S&P 500 or NASDAQ or Tesla stock or anything, you're really happy. And everyone, was still predicting things that are up and to the right. I think if you look at, the vast majority of like, expert predictions about the market, right? People are a lot of people are thinking it's going to get worse before it gets better. Market's going down another 10, 15, 20% next year. Housing going down next year, right? So the first part of that is, what should you be holding right now? And I think a lot of people in history over the last 1,000 years, right, in markets like this have generally flocked to gold and precious metals. But they've always been really, really difficult to kind of buy and hold. I think which is one of the reasons we built what we built. I think when you ask about kind of the experience I've had that kind of gets us to this point, I think there's really like two components of kind of digitizing something, or tokenizing something, or creating an alternate sort of system. And one of them is actually just kind of the creation of the asset, which frankly is not that hard, right? Like, okay, well, I'm going to go create an Ethereum token that represents a security or gold or a real estate, and maybe that is tied in some contract to some trust agreement or LLC or something, right? Which is like where it touches the real world. So that's kind of like the first part of it, and frankly, that part's not that hard. The hard part of this is actually all the other intermediaries you need to kind of work together to facilitate trade, right? And that's an exchange. That's an on-ramp and off-ramp to real world dollars. It's legal contracts. It's what happens if you lose your private keys? What happens if you get hit by a bus? How do you transfer those assets to a spouse or a loved one? And those are all areas that can be really, really tricky to get right. It's part of the reason that as we're starting this, very, very long journey at Matador, we're starting with a bit more of a centralized platform that touches the real world in enough ways where you have a place to immediately sell your gold if you want to, because we have our own platform. You've got a place to reset your password if you lose your keys, because people you don't want to be sitting here losing thousands of dollars if someone wipes your laptop password, right? Like so there's lots of little things there that we're trying to kind of soften, with a real goal of moving to this world where a lot more things are centralized, right? Like you said, people are moving away from Wells Fargo and Bank of America to kind of storing their money on Square and PayPal and Robinhood and things like that. And what those guys have done a really, really good job of is moving usability and functionality to the place people hang out, which is like their mobile phone, and paying via Venmo and Cash App versus a check, right? But the reality is all that stuff works because you have this real embedded connection to the real world of real banks and things like that. We're building some of that, but we also kind of need the world to kind of build around us so that when those things are ready, that we're also ready, right? So, but your point's a good one, that I think it'll take some time and it'll get there, but the consumers clearly want it, and companies need to adapt to that.
I definitely agree that a lot of people definitely got caught up, like you said, in that trend of just seeing, things are moving well, things are going up and to the right, like you talked about. And a lot of people started to realize when the other foot finally came down, maybe I'm not doing things completely off of knowledge. Maybe I was getting a little lucky too. Um, and that's where a lot of those conversations come in about, doing your own research, really having like a fundamental understanding of what you're putting your money into. I know I've had good and bad experiences with investing, and I definitely agree that there's some form of, whether it's a digital banking app or it's digital like brokerages, those things all have to have some ground in like traditional methods. I do believe that some of the negative side of things, like Robinhood's trade halting, or some of the things that we saw early 2020, where people were either winning massive amounts of money on the stock market or really losing a lot of what they put into it. Those things are the grounds for what we're moving into now, which is kind of, people have picked up so much knowledge and terminology and new ways to either hedge against that thing that really took over and showed them the lessons they didn't know when they were all cocky about how well their money was doing in the market. Um, so much of what investing has become now is like, it is built for a generation that, like we said, is on your mobile device 24/7, not really taking too much time apart from it. And that can be a good and a bad thing. And I talk about this kind of like social aspect where, um you see success all around you and you kind of try and follow whatever the newest thing is, but sometimes it's key to look at what the foundation of it all is. If someone is just built on, yes, this is the one thing that everybody's doing, more often than not they're not gonna weather the storm when everybody's like cash cow stops producing what they have. um I don't know if there's a better way to say that, but sometimes it's better to take your time and build slowly as far as wealth and assets. And I don't think a lot of people are used to that yet. In the younger generation, I think a lot of people that I've grown up around are more chasing that instant success. Like, what's going to be the thing that turns me into an overnight millionaire? And that's one of the things I kind of try and reiterate. Like, you don't have to find your like retirement tomorrow. There are things that are available to build wealth in a more sustainable manner. And I think blockchain, there's good and bad to it. I've seen a lot of companies that kind of, and even recently with things like FTX, where you see like multi-billion-dollar um firms just disappear overnight, or like there's a lot of chaotic movement in digital and blockchain based environment. But some things, and it can be prevented, but I don't know how long it's going to take or what we're going to see in the future. But at some level, what we talked about, where more traditional aspects of finance come in, the regulatory side of blockchain and cryptocurrency is catching up. It's just a matter of when, rather than how. I think there's a lot of different ways it's going to happen, but until people like truly understand what they're getting themselves into, I think a lot of people are hazy on cryptocurrency, and I definitely enjoy learning about, what is the thing that's going to set XYZ apart from what we've already been doing. So, with a finger on the pulse, I do think that those bad events, those negative occurrences that we've seen, whether it's like just cryptocurrency projects that are getting whaled and torn apart from the very jump in a contract, or things like just people not really doing research and then they end up upset with how things perform. Um, I think we're going to see the other foot finally land sometime in the near future, where the more regulatory side of things, and then maybe you won't see like 2,000% returns in a day, but you'll definitely see things kind of level out and mirror what's happening in traditional finance, where there will be solid performers that you can invest your money into and kind of be more reliable, whether it's gold assets or we turn to like crypto based ETFs. I know, I believe it was either BlackRock or another company that's like well known in the financial space, or no, it might have been even JP Morgan, but there was a company that built out like wallet infrastructure for their existing customers.
Mhm.
And I think that's more the trend that we're going to see in like the mainstream, where people will see something they already trust with a name that's reputable, and they branch into blockchain and cryptocurrency that way. And like we talked about with gold, like that's a known thing. Like that's a commodity that people trust already. So and I've said this before about like, do you follow what you trust or do you follow what everybody else is doing? I think a lot of people lean towards the trust side of things. But also there's such a gap. Like I've talked about this with a previous guest, David Acosta, and he talked about maybe it's not so much trust because people will throw their money at whatever, but what's the level of education they need to meet to commit their funds to something that they um, haven't heard about before. So cryptocurrency is catching up in a lot of ways, and so is like all other aspects of finance on the blockchain, where once people like really start to build that knowledge, the money will come, and then people will start to realize like, okay, this is what's been consistent in blockchain and cryptocurrency. This is what I can follow. These are the consistent performers, and they're going to see results that are beneficial versus, just dumping all of the money that you have into one coin and hoping it works. I don't know if you have any like specific stories or experience with, some new thing that you kind of had hopes in, but it didn't work out, or like something that you think is going to really set the market apart in the future as far as like building out more mainstream and reliable ways of people getting invested on the blockchain and cryptocurrency.
Yeah, no, absolutely. Lots of kind of great thoughts there. I mean, I think just to take one quick step back on something you really touched on is investing overall, right? I think people one of the best ways to not use your brain too much in a good way, but also not like trick yourself, is really to find a good way to be consistent, right? And that can mean again, right, for the last 10 or 20 years, like people that diversified their portfolios into bonds and gold and real estate and whatever, look silly compared to people that just bought a bunch of Bitcoin. But you realize that people's lives are pretty long. You really need to look at your life over 10, 20, 30, 50 years. And history doesn't lie here. You talk about something like FTX or the crypto market as a whole, and to use like video game parlance, like they've kind of like done a speed run through basically like every financial folly you could possibly make, right? And that's why all this regulation has been created, is to prevent these mistakes after they happen. And whether it was the Great Depression or the banking crises and run on banks, right? All these things aren't new. They're new to crypto and new to people in their 20s. But I think there's going to be a lot of frankly positive regulation that comes out of this stuff. One of the cool things about crypto overall has been, because they've kind of flown in this parallel regulatory path, there's been an ability to have a ton of innovation and a ton of speed, right? You can go create a new token, go create a new asset like in minutes. When you ask about like what's really interesting, I mean, I think to me, it's basically in order to create a new product or a new financial product or security in the old world, so to speak, takes years and millions of dollars, right? You want to go take a company public that's in a new space, like it's going to cost you $5 or $10 million. Whereas with kind of crypto and blockchain, you can create a new financial product, right? A synthetic ETF, or a trading pair between, gold and Apple stock, right? Or, compare Manhattan real estate to, Miami real estate. Like these are all like products that can be created really, really quickly. Um, but so which is something I'm really supportive of is blockchain not just for the sake of creating and trading like fake internet money and fake internet tokens, but when they, the trading infrastructure, the speed, the innovation, the coding backend, all that stuff, I think will make the real world a lot more efficient. And that's kind of where my both kind of mind is and my money is of backend stuff in this space. But I think for consumers and individuals, I think it really goes back to saying, look, I'm going to have a plan of how to invest, and maybe some of that is in stocks, and some of that is in Bitcoin, and some of that is in just weird meme tokens or whatever. Maybe that's a couple% of my net worth, but I'm not aping in with my credit card when I hear a hot tip on from a buddy on Twitter. Like I think just being consistent is the best way to do it, and find new opportunities, learn about stuff, but just be consistent to me is the best way to kind of build wealth, but also have kind of fun doing it.
Yeah, I do think there's something to be said for consistency, and as I've seen it develop, a lot of people really sought cryptocurrency really early as kind of this way to be anonymous and like hide away money to where it couldn't really be traced as easily. But now, as the situation's developed, a lot of people are starting to notice like everything tied to a wallet can be tied back to that wallet. So like all in and out um money and transactions, everything's on the blockchain. So it's stored, and maybe that's not so anonymous anymore. A lot of people, uh, whether that's good or bad, they've started to realize like, okay, there's some form of regulation and accountability with this. So I think that serves almost that step forward as, you know, not everything is so spread apart and unique when everybody has their wallet set up and everybody has, I'm a customer of, say, JP Morgan. They just started a wallet program. Now everybody's all tied on the blockchain, and the way that companies are able to integrate that has been really interesting. Even seeing things like people, on an online game working to get a coupon so that they can get a free burrito. Like those things, while they seem trivial now, I think are bits and pieces of the foundation of what we're going to see in the future. And even bigger companies are taking part to use it kind of as like marketing right now. And so a lot of celebrities are getting caught up in, okay, I got this free asset, cool. And then they're like having issues with the disclosure of it, whether it's legal or not, and they're getting fines. We're starting to see the very early phases of, okay, how can companies integrate? How can people get onboarded without really having to go through this laborious like setup process? And I think that's good for not only Matador and bringing people on into something that's already an established market with gold and commodities, but you also open the door for so many other things. Like, say, I'm really interested in concerts, and there's a company that does like, exclusive events for people who hold XYZ asset. That's a lot of the interest and where the market is right now. I'm very interested to see how it develops over the future. Um, I don't know if there's any like red tape on making predictions, but I'd be interested to hear where you think things are like headed in the near future versus, let's say, 10, 20 years down the line.
Yeah, I think in the near future, it's funny. I think back in 2005, 2006, I spent a bunch of time just traveling around Asia and in places like Japan and China. And I thought it was like the weirdest thing that I'd be on the subway and everyone's just like staring at their phone all the time. Like, what is going on here? Right. And you go, 5, 6, 7 years later, and it's in the States as well. And, I think there's a lot of these little parallels where, these highly concentrated, highly internet active populations in markets like Japan and China are often a precursor to what happens in a bigger distributed economy like America. And to me, like the one thing that you see in those markets that you don't quite see here yet is like the advent of like the super app like WeChat, where every single person lives on this app, right? You use it to chat, you use it to pay for your groceries, you store your money there, it's your bank account, it's your social media network, right? Like, so I certainly think that in the near term, you're going to see a lot more of that, which are these like multifunctional omni apps. That and to your point, like that's in many ways that's going to be the end of privacy, right? Because now you've got one place to see everything that you do. You're absolutely right that almost nothing on a blockchain at this point is private, right? All these little windows that existed, tornado cash, and these like all these things have basically gotten shut down. That's the you see where the regulators are actually acting in the space, and it's like it's a cutting off the off ramps and the on ramps to sort of true anonymity. Whereas, the Coinbases of the world and the PayPals and the Squares and the Robinhoods are very able to, innovate on the blockchain side, but they've got all the information. So you're not going to hide from the taxes. But so I think in the short term, I think you're going to see a lot more of that, which is like these omni apps, and whether that's PayPal or Square or Robinhood, like doing more of this stuff. In the long term, I think a lot more of like when you lower transaction fees and friction and increase trackability, what that really turns into is like much more of a transactional economy. So in the same way that a lot of people now, instead of working day jobs, they work Instacart or Uber, and these side hustles where it's like they get paid per job, right? They get paid like $9 when you go deliver something, or $15 for an Uber ride. I think a lot more of the overall economy is going to shift to that direction, because you're going to have the trackability and the ability to do microtransactions, right? Write a piece of content, make $4, click on this ad, make 23 cents, right? And your one wallet that's sitting there, whether it's a bank, JP Morgan wallet or something else, is going to be accumulating this dust of capital that you're sort of responsible for allocating. So versus saying, hey, I'm getting paid, once a month. Like, to me, that'll be a pretty interesting shift that I see over the next couple of years.
Yeah, and that's one of the things that, I mean, I've highlighted this before, but the transition from whether it's a salary or hourly pay into all these different varieties of, let's say, work from home became really popular in 2020. um or even just gig based economy, like working small odd jobs to make up for those issues that we faced in 2020. I know myself and my wife were doing DoorDash at the time, just to like kind of have supplemental income. And I think I agree where we'll start to see a lot more of uh I wouldn't say the same thing, but like a refined effort to kind of aggregate, well, okay, here's all the different accounts and services that I can provide, and they're all tied to like a profile, like you said, that's all under one app. So now it's like a much more direct. I would compare it to what Fiverr does, where there's like gig economy for every different thing, and you can search it up. Okay, this guy makes music. This guy will do like channel art for a YouTube creator, whatever it might be. And now everybody's got tied to their social platform. Here's all the things that I do for money, and here's how you can reach me for services. And also here's the investments I'm making, and here's my public portfolio. Like there's a lot of interconnectivity, and I think there's quite a market for. I don't want to compare it to social currency, which is the more Eastern, like comparatively China and North Korea kind of work on those aspects of bringing everyone under one umbrella, and if you perform, you perform. I think it's going to be much different, where it brings accessibility to a lot more ways of making money, a lot more ways of moving your money, and the financial landscape is going to change in such a way that upward mobility is a lot more capable for average Joes. And I think that's what we really saw in 2020, where retail investing became the new thing that everybody was interested in. Whereas in the future, it might be I already know there's like digital business cards, which is what the company Dot does, like on an outstanding level. I've seen their stuff. Um, but I think we're all going to have this ability to kind of create value where we might not have ever perceived it before, and whether that's on the blockchain as a service or just day to day, like here is all the stuff I'm doing off internet, and you just bring it to an online space, and now you have a customer base and you've started a business without ever really going through the trials and tribulations that you would have had to before. And I think the accessibility piece is what's really going to drive everything in the future, where, like you said, if everything's all on one app and you can just launch yourself as a platform and not have to fight an algorithm to compete against other people. Now I've got like, here's all of the things that I'm doing, and whether they're producing income or not, it's all visible, and people will have a much more interactive way of either supporting each other or like creating a space that is more conducive to a younger market, and bringing in like this idea of this is the way that we used to do things, and now it's much more integrated and much more accessible to a general public.
Absolutely. No, I completely agree. I think Fiverr is a fantastic example of that, right? Where you're like, here, like you said, here's everything I do, and just say I'll do it, right? Like you don't have to sit here and create a contract. You don't have to sit here and like make a bunch of interviews, right? You can see people's like review profile and things like that. So it's a really great example of that.
And I think it's only going to get bigger as we move forward, where anybody who can like build out a business plan is now in such a position where everything that they do is almost a business plan, in that sense, where it's like, okay, your social media, that's a media company now, or like, and I've heard this in multiple different ways over the last couple of years, where it's like anything that I do right now, whether it's this podcast or um like just posting on social media, it gains its own traction, whether it succeeds like long term or not. And now it's all just sat on a digital platform, and it's evergreen content that doesn't really go away. So I think a lot of people are going to branch out in that way, that like you can sell a tweet in today's uh economy, and that's a weird concept for, let's say I go back to me in 2016. I'm like, hey, you might want to buy one of Jack Dorsey's tweets before Twitter gets sold in 2022. Like that would be an interesting concept. And one of those things that we're going to see in the future just develop, and I think we're in for quite the ride, because I didn't see any of this coming when I was in high school about to graduate. Bitcoin was like not talked about in my circles. It was like $200, whatever. But I definitely think there's room for growth in every aspect, whether that's social media, business landscape, blockchain. Um, and like we talked about, just the accessibility and how quickly things grow when they're readily available platform. It's just beyond me. And social media and phone use has driven everything to this like hyper virality, where anybody can succeed in the aspect of like just putting out content on whatever they do.
I mean, to be an expert, you used to, need to go to college and be a PhD. Then it was like, well, you need to write a book. That now it's like you need a popular TikTok video and you're now the expert in something, right? Like it's great.
Right. Yeah, it's definitely, and I have a hard time, as a 24-year-old guy, and I've made this joke before. It's like I see somebody and they're right here, like within 6 feet, and they're talking, and I assume it's to me, but then they're like, "What?" And they're on the phone on their AirPods. And I'm like, I can't keep up. So I definitely look forward to being outpaced in new ways, and seeing what I can learn from even people like 3-4 years younger than me have taught me so much. And I think it's interesting because even my 18-year-old brother-in-law, he lives with me, has just taught me so much about like, here's all the things that my friends are doing, and this is what people I know have invested in, and I'm like, seems interesting. And then I check it out, and these kids have made like stupid amounts of money that I've never like even seen on just like random things on the internet that they're doing. And it's just new and unique, and I think we're going to continue to see those kinds of things in the future. I definitely wanted to say I appreciate like all of the new conversations and ideas. I'm going to have to rewatch this a few times and kind of dig into some of the things we talked about. But before we go, I definitely wanted to kind of bring up, what is one thing that you would leave someone who's younger and investing very early? What is one thing you would have them kind of take as a piece of token advice? And just one thing that you're doing in the near future to kind of broaden your horizons and build out?
Yeah, I'm gonna do two things. It's all right. Like, one is just Captain Obvious here, but some of the best advice is super obvious, but starting super early and consistently is just the best way to succeed, right? Like, I've got my kids that are 5 and 7, investing their allowance and stuff, and whether that's Bitcoin or just accounts that make 4 or 5% interest, that adds up tremendously over time. I mean, I wish I had done a lot more of that and a lot less, you know, other stupid stuff when I was in my early 20s. And I think the second one is, there's this really like lightly read book, but it was a really good one by James Altucher called the Forever Portfolio. And I think it's kind of like saying, hey, how do you make like one or two really simple decisions that can like really improve your life without having to like micromanage it? And I think the thesis was like, just like look at the world around you and think about what are the one or two things that you think are going to change in the next 10 years. Um, and like make bets that you think, or at least allocate some of your portfolio to some of those things, right? Like, some of those are really obvious, right? Like, but like people are getting older, right? More people are working from home. Less people are, going into big offices in the city. Things like this. If you can find these big mega trends that like, no one needs to tell you a hot stock tip for that kind of stuff. It's just like watch the world around you, see what's happening, make decisions based on that, and make one or two investment decisions a year and say I'm going to put 1 or 2% of my net worth into a couple of these mega trends, and whether that's an ETF or whether that's a specific stock, right? That does something that you think is valuable. Like these, tailwinds are going to move the market much more than these hot stock tips, or trading in and out of stuff every other day and paying a bunch of taxes and transaction fees and mental attention that you could use to better yourself. Just make a couple good decisions a year, or even every couple of years, and just like put your money where your brain and your eyes are. I think it can be a really, really good good strategy for someone that's younger that may not have as much experience or money or time, frankly.
I love that. Just the idea of, it doesn't have to be this overnight success. If you have and apply consistency to something that you believe in, it can produce a lot better results over a long term. And like you said, making one or two good decisions a year, after a long time, you've made 20 really good decisions in the next 10 years, and it turns out to be much better than what we're doing, where we just like follow whatever this guy on TikTok said and just do it right now, without doing any of our own research. I think that's a very beneficial way to look at it, where it's like, you don't have to succeed in everything, but if you see something that's working and then you follow it and just kind of make these incremental improvements over time, you'll see a much more drastic, and we'll say exponential growth over time, versus what everybody draws to, which is like this absurd return on something that doesn't even make sense. Um, but I definitely appreciate your time, Devin. I had a lot of new perspectives brought, and a lot of things that I can kind of take away, and I hope the audience can as well, where it's like anything that you didn't come here with, or that I wasn't thinking about before this conversation is now that's fair game. And we can kind of play out how do I want to move my money now and how can it improve my future? So, like I said, definitely appreciate your time. Thank you for,
Absolutely.
sparing me a little bit of your time so that I can pick your brain. It definitely helps. And I hope to talk in the future.
Definitely.
Uh, if
Same. Thank you for all the great questions and perspective as well.
oh, I hope I hope my questions made sense. Sometimes I get a little
They're good,
long-winded.
man. I like it.
All right. You have a
Cool.
great
Well, thank
day.
you so much.
It
All
was a
right.
good
Cheers.
time.